we have a ton of volume that the price needs to get through, and that's that's quite a bit of supply to get through. We'll just have to see what happens into next week. But the main level I would be watching, and I am watching on the weekly side of things, is this line of best fit, this dashed black line here. If price finally closes above this, this is where I think buying will really start to take off. But until then, we may just chop until we break through this dashed line. We'll have to see.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, podcast. This episode is sponsored by ResearchDrivenNews.com, where you can gain access and get instant breaking news before the crowd. And they've got something really special for you over at ResearchDrivenNews.com/report. They just released a special free report that you have just got to check out. There you'll find what some people are calling the Shopify of mobile, and the top 6 reasons to read this under-the-radar report. They specialize in showcasing companies that are projected to maintain double-digit growth figures into the next year and beyond. Now today, they're featuring a growing company that's severely undervalued compared to its top peers and has multiple catalysts in place for expansion. Now listen, don't just take my word for it. Go check out this free report today and find out more about it over at ResearchDrivenNews.com/report. That's ResearchDrivenNews.com/report. Hey listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Everybody, Jake here with Trendspider to go over the weekend analysis on the broad markets as well as 5 charts going into next week. And you guys will see those 5 charts here in a second as we go over the broad markets. Starting with SPY, we really talked about this volume shelf all week, and this was exactly where supply was drying up and slight demand was coming in. You can see by these wicks here every time it tested this volume shelf. So that is something to keep in mind going into next week, that this was a level that held really nicely. Now on the weekly side of things, we did actually break out of this kind of ascending triangle formation. We did not close above these previous highs here in August. However, it is a strong move up. However, I'm not always a huge fan of these gray hollow candles. That essentially means that we closed above the previous week, but we did not close above where we opened at for the week. So you can see here in October, mid-October, we did have another setup like this, and we did pull back. So that's something to keep in mind going into next week for SPY. Now going on to the Qs, we can see here that we do have a ton of supply to get through from this October high. So if we have this very early stage possible ascending triangle starting to form, we have a ton of volume that the price needs to get through, and that's that's quite a bit of supply to get through. We'll just have to see what happens into next week. But the main level I would be watching, and I am watching on the weekly side of things, is this line of best fit, this dashed black line here. If price finally closes above this, this is where I think buying will really start to take off. But until then, we may just chop until we break through this dashed line. We'll have to see. Now going into IWM, we do have a nice breakout to report here on the weekly side of things. First thing I'll go over is this daily bull flag. You can see that it's definitely not your traditional looking bull flag. However, you can see how this consolidation is kind of forming after the big gap up on Monday. And if we do close take off. Now, on the weekly side of things, you can see that we did finally break out from really starting in 2018. We have this really strong level of resistance here that acted as resistance both in or initially kind of a top in 2018, but then resistance in January of 2020, and then we could not break through that until this week. So a nice move up this week, but same thing as I mentioned on SPY. There was definitely a close above last week's high, but we did not close above the open, which is something to consider. This sometimes will be an area where there is a little bit of pause in moving up. Classic breakout would be to test this area of previous resistance, act as support, and then continue up from there. So let's see what happens going into the coming weeks. VIX is one that I did want to point out a couple things. One, we still have this huge gap below from late February, early March. I guess, no, that was late February, not early March. But all in all, that's kind of when the waterfall started on SPY, and that's how you can see this big move up in VIX. So that gap below would be a target below for those who are shorting VIX or short volatility in the future. However, it is important to note that we are still kind of creating these higher lows here in the last few days. So keep that in mind. On the weekly side of things, you can see we clearly broke down. The charts aren't always the best indicator for VIX, but it is something to just visually see where we are for the volatility index. We did break down here from that rounded bottom. Now going into the 5 charts we're going over NEO, AMD, FSLY, PINs, and SHOP. So let's jump right into it, starting with NEO. NEO was a really good example last week of using the volume shelf as a level of interest both for buyers, but also just a level where supply dries up. So, this area doesn't necessarily have to be a demand zone where buyers step in. It can simply also just be an area where most people bought at this area in the 40, 41 area. So then when everybody's holding at 53, 52, whatever, what do we hit at? 54 on Friday, once the price starts dropping back down, this area really is just a break-even zone. That's essentially what it is. This tells us that there were a lot of shares that bought here. As the price moves back down, nobody has any more profits to sell, supply dries up, and we get our bounce. So yes, buyers probably stepped in as well, but just remember, just because we bounce off this area doesn't mean it's demand. It can easily just be a shift in the supply curve and supply drying up as well. Now, on the weekly side of things, I do want to highlight this for a couple different reasons. So you can see here, one, since since July of 2020, we have really been making very big progress on the price action to the upside. Now, hitting higher highs on price, but hitting lower highs here on the Williams percent range. And the Williams percent range is definitely my go-to for divergence. I use this over the RSI all day. I will use the RSI to kind of look and see what that's showing as well. But for divergence, I generally am looking at the Williams percent range. And the one thing I want to point out here, especially with last week, is we closed up for the week, but the Williams percent range moved down. So that is a discrepancy to keep in mind going into earnings next week. Does it mean that we're going to drop next week? Maybe. At the end of the day, nobody knows what's going to happen. We use these charts to get an idea of what can happen and the levels to watch and the discrepancies that are forming, just like this negative divergence here with the weekly candle versus the Williams percent range. So let's see what happens going into next week. Personally, whenever I see the price closing up for the week, but the Williams percent range moving down, that does kind of put in a short-term high. So let's see if that case study plays out next week, and we'll do an update going into next Friday when we do another video. AMD is the next one to look at. We have this inverse head and shoulders here. Let's turn off the volume profile here and just look at the inverse head and shoulders. If we do start to break down, that would invalidate the inverse head and shoulders, but for now it is still holding, and let's see if we can test this 85 area coming into the next week or two. Now on the weekly side of things, I want to show this setup because it's just so similar. You can see here in April, May, we did have this huge area where the price was just kind of trading within this range. We finally broke out. We then created another range for about the last 3 months, and you can see that we're really starting to get tight here, really testing both of these levels, both on the upside and the downside support and resistance multiple times, and something's going to have to give here in the coming weeks. So let's see what happens. If I had to guess, I would expect a move to the upside, but that's just my opinion. The market doesn't care about my opinion. Let's see what price action tells us. Going into FSLY, this is another really cool case study using the Williams percent range. First thing I want to point out here is this alpha trends anchored VWAP from the all-time high was perfectly tagged on Friday, maybe by a cent or two above, but just a really nice case study using the alpha trends anchored VWAP. This is something I really never used before I met Brian Shannon, who really created the alpha trends anchored VWAP, and it's just something I use in my analysis every day now. Now going into the weekly side of things, I want to do a case study here on the Williams percent range. Not the Williams percent range, volume profile. So if we go to the volume profile, anchor it from the high, you'll see this big chunk of volume initially acted as a supply zone multiple times when the price finally started to move up from the low 60s. and then finally we broke out, and now this is kind of creating a base for buyers. And so, or just a base in general for price, not necessarily buyers, maybe supply simply just dried up. But this is an example where initially this was supply, and then price got through it, and now it's a base for price. So let's turn that off on the daily side of things, and let's look at the weekly, anchoring the volume by price from this March low, and you'll see we pretty much have the same setup, where you can see a lot of this area above is going to act as break-even supply. So remember, when you bought on that huge move down in the 80s and the 90s, you were a bag holder for quite a few weeks. And so as the price was down at 64, you have a pretty decent drawdown. Now, as the price moves back up to where you're back at break-even, this is going to act as an area of supply initially, because some people are going to break even and they're like, wow, I just dealt with a 20% drawdown. I'm getting out and putting my money elsewhere. So initially we will see the same thing that we saw here on the daily side of things on the weekly. So if we can get through this initial supply and close above, let's say 90, 91, this will act as a base for price, and that's when things will definitely get interesting going into the weeks ahead into 2021. Now let's go into pins. Holy moly, it is windy outside. Wow, it is crazy windy in Denver today. Now on pins, we do have this bull flag here. So you can see here just a really nice defined bull flag. Let's see if we can break out of this area into the coming weeks. The other thing I want to point out here is this just very solid uptrend, getting very tight. I mean, it's very, very slightly narrowing. If we kind of zoom out, you'll see like over time it is starting to narrow into a very slight ascending rising wedge. However, right now I'd call it more of just a price channel because it's such a slight kind of narrowing formation. However, this is very tight. Whichever way the price breaks to the upside or the downside, I think I think that will start to accelerate, and we'll just have to see which way price actually breaks. Going into the last one, Shopify. Shopify is interesting for a few different reasons. Let's start on the weekly chart. So if we anchor the volume by price from the March low here, you'll see that we do have this volume shelf forming. Price is really respecting it nicely, but it's also respecting the Alpha Trends anchored VWAP if we go to the weekly side of things from this breakout candle. So this is something Brian Shannon teaches. Essentially, anytime you have a breakout, we did have this February high. We retested that February high in April, finally broke out. That's where we want to say the status quo changed, where we started to really get some buying conviction. And you can see over the last few months, this has acted as a level of interest or an area where supply just dries up multiple times. So once again, last week it did the same thing. So not only did we have the volume shelf, but we also did have that anchored VWAP. And so if I turn that anchored VWAP on, you'll kind of see that visually here, almost a perfect tag. So all in all, definitely needs to hold this area. If we don't, there is a big volume gap below till around, let's say, 750. But until the price breaks down through this anchored VWAP from this breakout candle, buyers are still in control. And on the weekly side of things for the bearish thesis, we do have this huge kind of rounded top here forming. So this really needs to start getting going if buyers really have some conviction here. A break, let's say a break around 1050, 1100 would be ideal. And let's see if we get it in the coming weeks. Remember, we do have a Black Friday sale going on for November chart month. Right now, we do have 58% off, or excuse me, 57% off. Today is Saturday, but as we go on throughout time, we do drop 1% each day. So definitely remember, as days go on, you will have less of a discount. We do have a 7-day free trial, so whatever day you do sign up for that 7-day free trial is the discount you're locked into. So if you did sign up today, you do get off. In 7 days, you do get the 57% off. So it's not like you sign up today and then you get the discount 7 days. You're locked into that discount today when you start the free trial. So if you have any questions, let us know. Thank you guys so much for watching. If you like this video, make sure to like and subscribe. And we do these every weekend, so make sure to tune in next weekend for the next one. Everyone have a great weekend, and thanks for watching.
Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.